to the most important piece at the moment. We'll start off the morning with the FOMC minutes. The Federal Reserve officials remain divided on interest rates, with some members seeing the need for more increases, while there were also some who expected a slowdown in growth to remove the need to tighten further. This even has the discussion or the decision to increase the benchmark rate by a quarter of a percentage point, but that particular piece of the decision making was unanimous. And staying with this, the Fed news flow and news flow around the Federal Reserve, another official from the Fed clan to reiterate is Mr. Waller. He said that we are nowhere near the end of the tightening cycle. Whether officials hike interest rates again next month or skip the move will hinge on key data over coming weeks, says Governor Christopher Waller.
And the US House Speaker Kevin McCarthy has indicated that talks have inched towards raising the ceiling despite disagreements over spending. Now, with only 8 days to go before the unprecedented default, McCarthy has tried to ensure a quicker deal by offering to not raise taxes, assuring that the US won't default on its payments. Even after concessions, McCarthy continued to add that it was the Democrats who were the problem. Meanwhile, US Treasury Secretary Janet Yellen has yet again reiterated this need for raising the debt ceiling, with June 1st being the deadline for default.
Right, and amid all of that chaos that's playing out, Fitch has gone ahead and put the US on AAA rating under negative watch, citing increased uncertainty over whether the country will raise its debt ceiling as lawmakers struggle to reach a deal. While ratings agencies still expects the lawmakers to reach a deal before an early June deadline, it's said that recent sparring over the raising of the ceiling has brought up risks of a potential default.
And UK inflation falls below the double-digit mark, sinks to 8.7% for the month of April. Still stubbornly high even as the economy defied expectations of a recession, inflation has come off sharply from the 10.1% mark in March, which was way above the consensus estimate of 8.2%. My colleague Sumita caught up in a conversation with Jan Lembert, head of Lambo Research Global Economics and Markets. Let's listen in to this slice of that conversation.
The UK has moved quite aggressively on interest rates, but it's simply not enough. We're seeing progress now. Much of that is due to the base year comparison for energy prices becoming more favorable, but food price inflation, you mentioned it there, including beverages, non-alcoholic beverages, continues to be running at 19% in the year up to April. So that is an astonishing amount, and that needs to be combated. So it's a real wake-up call. It's again a sign that Brexit is making a lot of processes harder. It's impacting growth more, but it's also making inflation more sticky. Also very present is a move from goods price inflation to services price inflation, and that should leave central bankers really worried, because that's much harder to combat. A lot of people thinking that what we'll need now is higher interest rates than we previously thought. You actually see gilt yields at levels that were last seen when Liz Truss tried to push through the mini budget, which wasn't a great success, of course.
Right, it wasn't really a great success, but the IMF said that it now expects the UK to grow by 0.4% instead of the economy, in fact, contracting. Will it lift spirits in London?
It lifts spirits, of course, you have growth, but in a world where demand outstrips supply, where supply chains still have issues, central bankers are essentially trying to bring demand down to meet supply, and that is their combat against inflation. They're willing to risk or even have a slowdown or a recession if it means bringing inflation and their inflation fighting credentials back under control. So in a way, yes, it's positive that we'll have growth, but it may also mean that the fight against inflation simply isn't working enough. We haven't hiked interest rates enough. That's a message that will be very sobering after that upbeat message, relatively upbeat, of course, from the IMF.
Right. So what is your expectation on rates, as far as the UK is concerned? We've seen that inflation has fell to an 12-month low of 8.7% in April. That's a bit of positive news. But what's your overall analysis on rates going forward?
Yeah, our analysts reckon that we could see another 25 to 50 basis points. And to be fair, that was, of course, before these inflation numbers hit. So if we don't see more progress in the upcoming months, then more is possible. It's not that the UK economy can really bear this very well. It's just that apparently things need to be hurt and broken to bring inflation back under control, or we have a totally separate problem, as this problem is becoming increasingly entrenched.
Right, that was my colleague Sumita in conversation with regard to the play out on the economy. Let's quickly move on. Semiconductor company NVIDIA shares skyrocketed 30% after posting their Q1 earnings, beating the street estimates due to booming AI demand for its high-powered chips, lifting variety of chips and AI plays. The gain increased the company's stock value by about $200 billion to over $950 billion, extending Silicon Valley company's lead as the world's most valuable chip maker and Wall Street's fifth most valuable company.
And well, with that, it's time for us to slip into a